The desire of every investor is to make incredible returns on their investments and to get back in many folds what they have put into the business. As a Tesla investor, do you think that investing in the stock long term can help you earn this much profit in the future? According to Millionaire investor Kevin O'Leary, one of the best times to buy stocks and invest is exactly when other people have chosen to not invest, probably for fear of the stock crashing in the future. Compared to many of its competitors, Tesla has a strong potential for the future. And so buying the stock right now at a lower price might offer you an opportunity to become a millionaire in just 1 year if the market does recover quick enough. Hey guys, welcome back to Tesla Tomorrow. Kevin O'Leary is a famous entrepreneur and businessman from Canada, and he's best known for his act as Mr. Wonderful throughout his appearances on the US business pitching reality show Shark Tank. O'Leary is a strong business tycoon with an eye for investments, and this could be one of the reasons why he invested in Tesla. Over the years, he's become a trusted investor with a good grasp of investment strategies and market development. In 2020, the expert said that Tesla was his best performing stock at the time, while attributing most of this investment to his son, who encouraged him to buy Tesla shares in 2019, stating that the car company is not an automobile company but rather an AI and data technology one. Kevin O'Leary is one of the fundamental strategic investors who is optimistic about the stock market, and Tesla in particular. Given his several bullish statements about Tesla, O'Leary's comments may suggest that buying Tesla stock despite the dip may be a good way to secure higher returns in the future. Can you really become a millionaire by investing in Tesla stock? Let's find out, but before we do, if you like this type of content, don't forget to like and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. In recent months, the stock market has been going through turbulent times, as stock prices, especially those of Tesla, continue on a downward trend. There have been one too many comments about Tesla's undervalued stock, and that's kept many investors in a position where they have to choose whether to buy the dip or sell their shares. This could be a very confusing state for investors, as upside might be huge if the stock market recovers and grows. However, there are many risks, one of them being that no one really knows when the price is going to go up, and that uncertainty has got many investors bothered about their shares. Tesla stock has experienced a series of downfalls, and the majority of this happened after Musk used some of Tesla's shares to buy the American social media platform Twitter. Following the news, several investors have begun growing rather pessimistic about Tesla stock, even though some others like O'Leary do not think that this is going to affect Tesla stock in any way. In October, O'Leary stated that he's positive that Musk will be able to conveniently handle Twitter alongside Tesla. He said, "I happen to have watched Musk forever, and I think this guy is a Teflon man, and he obviously can multitask. I bet on him in this deal. By the time all this stuff is over, I think he's going to have a good outcome." O'Leary predicted that Musk will indeed assume ownership of Twitter once the dust has settled, adding that he thinks that Tesla's CEO is going to improve the social media platform's user experience substantially when he's in charge. He also stated that by owning Twitter, Musk could use his influence and popularity on the platform to then benefit his other companies financially, like Tesla and SpaceX. O'Leary cited that Tesla is the only car company on Earth that pays nothing on advertising, adding that very few people get to own their own unregulated network. The battle over Musk's attempt to pull out of his Twitter deal after initially agreeing to buy the social media platform for $54.20 per share hit a new escalation earlier this year when Musk said he wanted to avoid litigation by returning to his original deal. The company's stock price experienced significant drops as investors feared what might be coming for Tesla. However, long-term Tesla investors did not think that this is going to be a problem. Tesla has successfully pulled through even tougher challenges, so it's probably going to do the same here. O'Leary believes that the best investing strategy in current turbulent times is to go for equities of large-scale companies with a strong pricing power that have the ability to withstand all inflationary cycles. And that's exactly what Tesla's doing. The car company has had to battle the inflation crisis in this past year, and this has been especially prominent in almost every aspect of the economy, in particular the automaker's cost of production. In response to this, Tesla's raised the prices of its cars, and it keeps doing this to reduce costs as much as possible. O'Leary mentioned that companies that are able to stay during these tough times often have potential business models and lower debt levels, allowing them to pass on their incurred costs to consumers and investors. The EV market's been quite competitive recently, however, the growth rates of the leading EV companies like Tesla have not decelerated. According to O'Leary, he considers the free cash flow and balance sheet of a company rather than focusing on comments about its stock. According to reported data, Tesla made over 900,000 automobiles last year, about a year after the pandemic. The car company also sold stock worth $16.4 billion in the first quarter of 2022 and disclosed a net income amounting to $3.3 billion. These figures exceeded Wall Street estimates for the company and show that Tesla is still in a good position to keep leading the EV industry. The automaker has a lot of structures in place to keep it in this position for a long time, and this could be one of the reasons why O'Leary remains bullish on Tesla stock. According to recent news, Tesla is preparing to offer a new Model Y trim for 2023, with a standard range all-wheel drive configuration and its 4680 battery cells that have just landed approval from the EPA. Tesla had previously built a Model Y with a standard range all-wheel drive powertrain at its Gigafactory in Texas in April, but they only offered it to employees. The vehicle had 279 miles of range and offered a more favorable all-wheel drive setup. However, it was being sold at close to $60,000, which was a considerably high cost for the range it offered. Tesla's 4680 cells could enter mass production by the end of the year, as the car company is already working with suppliers like Panasonic to develop prototypes of the cell in preparation for large-scale production next year. In July, Monroe & Associates, a company that tears down vehicles, disassembled one of the Tesla Model Ys to learn more about the battery. The experts revealed multiple technical aspects about the battery, adding that it looks groundbreaking even from the outside. What's more, it's incredibly light. It only weighs 1,200 pounds, while the battery pack for some other EVs weighs twice this. While this may seem like an insignificant amount, in the automobile world, that's something that can truly help Tesla keep its leading position in the market. There's no evidence of the gross deceleration in Tesla's earnings potential, so it might be a wise decision to buy more Tesla shares now that it is currently trading at a low price. Stock prices are constantly changing and are influenced by ever-changing market conditions and transactions which regard the stock. There are millions of transactions happening every single day. Therefore, the stock price is not the best indicator of whether to buy a stock or not, especially if your investment strategy is to buy for the long term. Dips may seem like a scary place to put your money. It creates the possibility to make more money, considering that you might buy an undervalued stock that can then grow exponentially in the future. However, your buying decisions should fit your overall strategy and should not depend solely on the price of the stock at this particular time. Investing is risky and you should do your own research. Be careful and exercise due diligence in learning about the market and the stock itself. Do you think it's a good idea to buy Tesla shares while they're still undervalued? Let us know down below. And don't forget to tell us what your valuation of Tesla stock is, and while it's still here. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.